Welcome back to Investing Talk Podcast. Today we're looking at a company you asked about, Idaho Strategic Resources. Interesting story here. They've got significant gold assets up in North Idaho, plus they're really pushing into rare earths. So the big question we want to help you answer today is this. Is Idaho Strategic Resources a good buy right now? We'll look at what they've been doing, their financial health, and what might be coming down the pike. And hey, before we really get going, if you find this useful, please do subscribe, like the video, maybe leave a comment. Oh, and definitely let us know in the comments if there's another company you'd like us to analyze like this. We'll really value your input.
Yeah, absolutely. And just to set the stage a bit, the information we reviewed suggests this isn't just hype. We're seeing some really strong operational performance lately. It's driven by solid growth in their gold production, sure, but also, crucially, by how they're expanding their rare earth holdings. Seems like there could be some pretty significant catalysts ahead for them.
Okay, let's start with that recent history then. Thinking about, say, the last quarter or so, what specific things did they do that got investors excited and kind of set them up for where they are now?
Well, it really kicked off back in August, I'd say. They finalized a big long-term lease agreement. It covered about 1,500 acres of land with rare earth mineral claims. That's a pretty major expansion of their potential resources.
Right, securing future potential. Did they back that up with performance from their current operations, though?
They did, yeah. Almost right away, they reported a record second quarter. And that wasn't just revenue, it was operating performance too. Higher output, but also, importantly, keeping costs under control. It sent a strong message, that they can manage growth and acquire assets for the future simultaneously.
Makes sense. What about the Golden Chest mine? That's their main gold producer, right? Did that keep pace?
Absolutely. Moving into September, the reports showed Golden Chest continued to ramp up production. And it wasn't just about digging more rock. This directly improved their quarterly cash flow, which is obviously key. And sort of behind the scenes, they were also making progress on the environmental and permitting side for future expansions. Less glamorous, but really important for reducing risk down the line.
Okay, so by October, you've got the new land, the strong financials, the gold production ramping up. How did the market take all that?
It definitely noticed. Heading into this last quarter, Q4, you could really see investor interest picking up steam. And what's interesting is it wasn't just about Idaho Strategic's own results. There was and still is this broader market focus on critical metals, on rare earths, the whole supply chain security discussion. So you had good company news hitting a favorable market environment. That really helped drive trading volumes and push the share price up.
Got it. So the story sounds good, but let's look under the hood at the numbers.
Right, because operational momentum is great, but it has to translate financially, especially in mining where costs can be, well, challenging. And when you pivot to the core financials here, the strength is actually quite impressive.
Impressive is one word for it. Looking at their 2024 results, these numbers aren't typical for a company at this stage. Can you walk us through that growth?
Sure. So top-line revenue surged nearly 89% year over year. That took it to about $25.8 million for 2024. Strong growth. But here's where it gets really compelling and where you see that operational control paying off. Net income went up. Wait for it. 663% year over year to $8.84 million.
Wow. 663% on the bottom line. Yeah. That's not just selling more gold, right?
Yeah.
That speaks volumes about efficiency.
Exactly. That kind of jump in net income, that margin expansion, it tells you they've likely figured out some key things in their process. They're not just growing, they're growing profitably. And this translates directly to earnings per share, the EPS. It came in at $0.64 for the trailing 12 months. So real value creation for shareholders showing up there.
Okay. Profitability looks strong. What about the balance sheet? Mining is so capital intensive. How liquid are they? How safe?
This is another area where they stand out, frankly. Their liquidity ratios are really strong. The current ratio is 5.11. The quick ratio is 4.78.
Over 5 on the current ratio. For a miner, that's quite high.
It is. It basically means they have over $5 in current assets for every dollar of short-term liabilities. Huge cushion. It means they aren't likely to be forced into bad decisions if commodity prices dip temporarily. They've got breathing room, operational freedom. It's a safety net.
And on the other side of the balance sheet, debt.
Almost non-existent, relatively speaking. The debt-to-equity ratio is incredibly low, just 0.04. That's a massive plus, essentially unleveraged. It means they have maximum flexibility to fund growth, either from cash flow or by taking on debt strategically later if needed, without being burdened by big interest payments now.
Okay, but let's talk about that recent equity offering. They raised $20 million. Good for the company's cash balance, yes. But for existing shareholders, that means dilution, doesn't it? How do we square that?
That's the right question to ask. It's always a trade-off. The way the sources seem to frame it is proactive capital management. They raise the money before maybe needing it desperately, likely securing better terms. Yes, there's dilution in the short term, no getting around that. But the argument is it's a strategic move. This cash avoids potentially taking on expensive debt later and allows them to fully fund their project pipeline, especially those rare earth initiatives. Plus, remember, they don't pay a dividend. All profits, all this raised capital, it's going straight back into growing the business. It's a bet on future expansion.
Okay, that makes sense. So we have this picture of strong growth, efficiency, very solid financials. Let's talk about why. What's the core advantage here? Why are they getting this premium valuation compared to maybe a standard gold miner?
It really boils down to that dual focus you mentioned earlier. They have the established Golden Chest mine, providing the cash flow engine from gold. That's the base. But the real kicker, the thing driving a lot of the excitement and potentially the higher valuation, is the rare earth exploration side.
Explain that a bit more. Why is rare earth exposure such a big deal? Isn't it just another commodity?
Oh, definitely not just another commodity. Rare earths are, well, they're fundamental to modern technology. Think high-strength magnets for EV motors, wind turbines, sophisticated defense applications, even smartphones. They're critical inputs. And the key here is the geopolitics. The US, Europe, other allies, they are all actively trying to build supply chains for these critical minerals outside of current dominant sources. Domestic supply is a strategic priority.
Okay. So Idaho's strategic, by having these domestic rare earth claims, gets tied into that whole national security strategic industry narrative. It's not just about market supply and demand for the metal itself.
Precisely. It attracts a different type of investor interest, potentially government interest too down the line. It links their future value to these big macro trends around supply chain resilience. And the sources also point out their local advantage. Seems they have good relationships with regulators in Idaho, a clean safety record that helps smooth the path for permits and expansion, minimizing some of those headline risks you often see with mining projects. So yeah, this dual exposure, gold paying the bills, and rare earths offering that strategic upside, that's what seems to be setting them up for potentially strong visibility and valuation growth into 2026, especially if, as expected, the global supply situation for these minerals stays tight.
Okay, so fundamentals are strong, strategic positioning looks good. How is the market actually reacting? Let's look at the technicals. What's the price chart telling us?
Well, the chart is definitely agreeing with the story right now. As of October 12th, the shares actually hit a new 52-week high, $44. Hitting new highs like that is classic confirmation of strong momentum. Shows new money is coming in, pushing the price beyond previous levels.
And are the key technical indicators backing up this uptrend? Moving averages, for instance.
They are, yeah. The stock is trading well above both its 50-day moving average, which is sitting around $28.05, and its 200-day moving average, way down near $19.64. Being significantly above both those levels, especially the longer-term 200-day, typically confirms a strong, established uptrend. It suggests the market has really bought into this fundamental shift.
One thing I found interesting in the notes was the beta. Usually a fast-growing miner like this can be pretty volatile, but its beta seems low.
That's right. The beta is listed at 0.75, which is notably low for the sector. A beta below 1 suggests it's less volatile than the overall market, and in this case, likely less volatile than its mining peers. That combination high growth potential coupled with lower than average volatility that can be really appealing, especially for growth investors who are maybe a bit more risk averse.
So lower risk profile than peers, but still capturing that growth. What are the analysts saying? And what's the general feeling out there?
The consensus among analysts is still a strong buy. Now, you do see some price targets, like from Roth MKM, that look quite conservative now, around $17.15, $8. Clearly, the stock has blown past those. But the overall bullish sentiment keeps getting reiterated in reports. And importantly, it seems both the institutions, judging by the high trading volumes, and retail investors looking at online forums and sentiment trackers are pretty positive. There seems to be a shared conviction that there's still potential upside here. The market momentum feels quite strong.
Okay, strong momentum now. Let's look ahead. What should we be watching for specifically in the next, say, 3 months that could really move the needle?
Right. Catalysts are key. There are a few confirmed dates coming up relatively soon,
Which we put on our calendars. Earnings first?
Yep. First up is the Q3 2025 earnings release. That's expected around October 30th. That'll be the first big checkpoint to see if the Q2 momentum carried through. Then, around mid-November, November 15th, there's ETF rebalancing. This is significant. If Idaho's strategic gets added to new critical minerals or mining ETFs, or its weighting increases in existing ones, that can force institutional funds to buy shares, driving demand.
Ah, the index inclusion effect. Good point. And
And
then the full year results.
Exactly. Q4 and the full year 2025 earnings are expected around January 31st, 2026. That will give the complete picture for the year and likely guidance for the next.
Okay, those are the knowns.
Mhm.
But the sources mentioned some rumors, particularly around the rare earth side. What's the speculative angle here?
Well, there are two main threads of speculation that keep popping up. First is the possibility of a joint venture, a JV, or maybe a strategic partnership. The idea is they could team up with a larger mining company or maybe even a tech company that needs rare earths to help fund and accelerate the development of those assets. That would be a major validation. The second big rumor is about potential government support. Could they get federal or state grants, maybe loan guarantees tied to those domestic critical mineral initiatives we talked about? That kind of funding would be huge, likely non-dilutive too.
Yeah, a JV or government funding would be game changers. But we have to talk risks too. What are the main potential downsides investors need to consider?
Absolutely. There are risks. On the company-specific side, we already touched on the dilution from that recent equity raise. That could put some pressure on the stock price in the near term if early investors take profits. There's also project concentration risk. Right now, their fortunes are heavily tied to the Golden Chest mine continuing to perform well and successfully developing those rare earth claims, which are still early stage.
Makes sense. And broader sector risks.
Always present in mining. Commodity price swings are the big one. Gold prices, rare earth prices, they can be volatile and directly impact revenue and sentiment. And the other constant challenge is cost inflation. Rising costs for labor, energy, equipment that can eat into margins across the whole sector. Although, going back to that low beta, it might suggest the market thinks Idaho Strategic is perhaps a bit better insulated from some of these sector-wide gusts than its peers. But the risks are definitely there.
Okay, so pulling this all together, the overall take from the sources seems quite positive, right? An 8.5 out of 10 bullish rating. And that seems based on that really exceptional growth, especially the profitability jump, the super strong balance sheet, the technical charts confirming the uptrend, and crucially, those upcoming potential catalysts.
That sums it up well. And thinking about investment timelines, the data suggests maybe two ways to look at it. For the short term, you've got that high frequency of news flow coming up, earnings, potential partnership news, ETF changes. That creates opportunities for traders playing momentum over the next 3 months or so. Lots for the market to react to. But for a longer-term investor, the story is more about that structural value. The scarcity of domestic rare earth assets, combined with their proven ability to operate profitably and expand, all backed by that solid financial position, that supports a case for long-term wealth creation. It's potentially a foundational piece in that critical mineral space.
Right, more than just a cyclical play.
Exactly. So we talked a lot about how that dual exposure gold plus the strategic rare earths differentiates them. And we touched on those rumors of JV, government funding, maybe even M&A down the road. So here's something to think about as you process all this. If, hypothetically, significant government support for domestic critical minerals does become a reality soon, which of those potential catalysts, a joint venture partner, direct federal funding, or maybe being acquired outright, which do you think would ultimately create the most long-term value for a company like Idaho Strategic? Each path has really different implications for their future, something to chew on.